What's going on, guys? It's Killer. Welcome back to the channel. Now, it has been a while since I have created an update. As you probably all saw, my last update was against the herd, net short. And obviously, I was going through my plan of shorting around the 94-95k region. You can see this was our deviation wick, and we rode this entire move to the downside, catching approximately a 20% drop, which is actually quite a meaty move to be catching this late in the cycle. So I'm going to be covering my plans, areas I'm looking for, what areas we need to hold, respect, reject, and so forth. So let's get started. So starting off, just quickly recapping what we did. So we entered into shorts around here. We had TPs around the yearly open, and we had TPs around the sweep of this low. We are 50% out of that swing short from the highs around this area. So what am I looking at next? Well, quite frankly, we can see all of these unswept lows were eventually tested. We had a clean break of structure of this previous wick low. So what do bulls want to see here? Well, it's quite simple, right? If we remain below this lower boundary, it means we can have more sweeps of the lows, especially this previous swing low, which was around 74k. We could eventually have a sweep of this low and then push back upwards, but primarily we need to hold around this low around here or around these previous areas on the higher time frame. As we can see by marking our previous all-time high of the last cycle, this is going to be quite the key confluence box to observe. So if we can hold around these lows, what do we need to see? We need to see Bitcoin reclaim that 80k. If we can't reclaim 80k and we end up rejecting this barrier as resistance, then we are going to trend right back downwards again and continue with this bearish trend here. But also, a very important thing to observe here is we have a CME gap, and that CME gap sits approximately at 83.7 to 84k, so around this area here, and we can see that matches up with a previous low which we broke around as well. So this is a high confidence zone because we have filled practically every single weekend CME gap within 2 years, only missing one or two of them. And typically what you want to see here is if we can reclaim this 80k wick low here, you want to look for the acceptance of that range. So we have an area here. You want to look for that retest after reclaiming. So what you want to see, a strong bullish candle through it, a quick dump to retest the previous range. If we can hold the dump, stop loss below the wick low, and looking to target that gap area here. Now, if we can't flip this 84k gap, then we are just going to hold that as an area of resistance and continue on this downtrend into our high pivots zone, which is around February and March, which I will get onto later on. But if we can flip this area at 84k, then we can run all the way back to the yearly open, which sits at around 87.6k. So these are going to be the areas to pay attention to. If we can hold the wick lows or have sweeps and reclaims, then we can push all the way up to 80k. If 80k acts as resistance, then we're going to be looking for a push downwards. If 80k is flipped, we look for continuation to fill that gap around here. If we can't flip this gap, same thing again, we're going to continue downwards, in which I would be looking for shorts around this area here with stop loss just above the yearly open and looking for continuation to the lower levels. Now, zooming out and going onto the quarterly chart here, we can see some very interesting levels appearing. So just by moving our current areas here, we can see we could sweep this area. We can see start of January, the new year, we had a push towards the upside. We formed the top half of the quarterly wick here, and we reversed all the way back down, lost the yearly open, and now we are back down to this area after sweeping this low. So again, we need to flip this low here to have any signs of a push back upwards. Unable to flip this low here, and we can end up sweeping the previous lows, which I pointed out around the 74k, and even around this previous wick here, which is at 69k. So that is what I'm looking at the moment. In terms of my higher time frame pivots and what I'm looking at here, if we start going over to the monthly, or even let's go to the 2 week here, we can see we had a push down, we had slow grind upwards, instant nuke back downwards here. And this area, which I have marked with my horizontal lines, is the high pivot zone. So whatever we do into this area, we are going to see an inverse correlated move. So if we sweep the lows and start pushing upwards into this area, matching along with the CME gap and so forth, I am going to be expecting a lower high around this confluence zone around February, March, and I'm going to be looking for continuation to these areas around here. If we start dumping into this area, on the other hand, and start continuing to push down into these time-based pivots, then I am going to be looking for a short-term recovery all the way back to the upside. And in terms of upside, the maximum target I am primarily focused on is around 83 to 84. And if we flip 83 to 84, I think the max extension we can see is a push all the way back up to the yearly open at 87k. I do not think we need to go above 90k because we had a few weeks of distribution around this area, well above the 90k area. We broke the lows, a clean retest. Structure is still bearish, lower highs, lower lows, and that is how the trend should be played. In terms of my overall higher time frame positioning and what I am looking for here, I ideally want to start building low leverage longs around the 65k mark all the way down to this previous wick low. Now, this is going to be the area I load up heavily in spot. And a matter of fact, I did point out that I would even start buying slightly early just as we break below the 70k region, which is around the previous all-time high. So the moment we get to this area here, I am going to begin scaling into some long-term bags and buying the dip. Now, this might happen in the next couple of weeks. It might happen sooner than expected. It might happen in a couple of months from now. However, when I'm buying long-term, I'm not too fussy on my entry prices. If the price is going to end up being 50% down from this area here, we can see 45%. I know that the maximum we could possibly see based on historical price action is another 25 to 30%. And if I'm DCAing within this box here, my average is going to end up in the middle. I might be down for some time, 10, 15, 20% drawdown, which is completely fine. But the moment the price starts reversing, I'm going to get a better entry than most people. And the reason's quite simple. I do not want to be fixated on one specific price for an entry. And the reason is because I do not want to be front run. I have made these mistakes well before in the past, and I'm not prepared to make them again. So again, when I am buying higher time frame positions or looking for low leverage swing longs, I did cover an article on my Twitter account covering a God mode strategy with 10x leverage. For those who don't know what I'm talking about, I will link it down in the description below, but you should go over that and I pretty much explain what I'm going to be doing within this lower band level into the next cycle. Now, this is going to be a position I will be holding for a long time, right? I do not anticipate us to V-shaped recovery from here. I expect Bitcoin to do some sort of schematic where we continue downwards, maybe have some retest, push down, maybe another retest, and then we end up crabbing into this area into Q3, Q4. I will be looking for that pivot towards the upside around this area as well. So we have approximately about 150 to 200 days left in terms of the bear market here. We can see I'm expecting a bottom around September, well, August, September. So we have about 200 days to obviously formulate this bottom here before we have this push upwards. But remember, it took 2 years to break a new all-time high. I think that this time around, the next cycle is going to take us a relatively shorter time span to break a new all-time high. I think we are going to break a new high, matter of fact, within 500 to 600 days next cycle. So we could see a new all-time high around late 2027 all the way to early 2028, where I expect a bear market for some time and then a recovery towards the upside where we look for that impulse. So like I said, when it comes to higher time frame position, I'm going to be buying anything below 70Ks. I'm aware we can go all the way down to the 50K mark. As a matter of fact, I hope we go down to this area. Why? Because I can accumulate more Bitcoin. And as I've stated multiple times in the past on my X, Bitcoin is the best performing asset of the decade. So I don't mind buying slightly lower, even if that means I'm in temporary drawdown. But as I've said, if we start losing the 69k region, we're going to be looking at that 60k support area, which was the previous range support. Matter of fact, let's go on the lower time frame here. we can see we had multiple wicks around that 60k mark. We had wick 1, 2, 3, 4, 5, 6. We did have breaks below, right? But the moment we respected and retested this 60k region, price propelled towards the upside or showed acceptance into the range before pushing back upwards. So if we lose the 70k region, I am expecting a wick all the way down to possibly these lower areas here around 67. But the main area I'm going to be paying attention towards is going to be that 61 to 62k region, where I expect us to form quite a solid boundary. And if we start looking at how much Bitcoin is down from its all-time high, we are down 40%. So what does that mean? Well, the good news means that we have already completed the meaty part of the bear cycle. Now we are likely to see, as long as we hold bearish structure, continuation towards the downside, more crab, more retests. But in terms of percentages of drops, we see maybe 25 to 30% left before obviously we push towards the upside. I'll be buying anything below 70, 60, and 50. That is my plan. That is my idea. Hopefully that helps clarify things. This is going to take some time to develop, but we will all be looking back at this video 2 to 3 years from now and saying what a fucking genius plan that was. Thanks for listening.